Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be talking about the idea of picking pennies in front of a steamroller, or as my uncle says, picking up coins in front of a running train. Both of these exercises are exercises which are extremely dangerous and very common in the stock market and general finance, the finance sector. It shows up more and more when you have a bull market run and people are getting carried away compared to bear markets, when people are extra fearful and don't want to take any sort of risk, let alone going in front of a moving train for a 1 rupee coin. So, that being said, I want to take up the example of carry trade, which has been unwinding quite a bit after the Bank of Japan pushed up the yen by buying blocks of yen on in the public exchange while selling US dollars in return. And this strengthened the yen, and they did it in 3 blocks. If you go back on VRich, you'll be able to find our video analyzing these exchange purchases. This is called open market operations, which the Bank of Japan engaged in, and they actively tried to manage their currency. And what this meant was that we saw the carry trade unwind, and we saw people panic, and we saw the stock market in the US, Japan, as well as other parts of the world, especially even ours, get jittery and lose a lot of confidence in the market, and then it bounced back afterwards. But this is a clear example of taking pennies in front of a steamroller. So let's first talk about what is the definition of investing. Definition of investing is very simple. It's the fact that you put out some money today with the expectation that you will get more money later on, and you have to make sure that your principal is safe. So this is the definition that is followed in the intelligent investor, that you have to first make sure that your principal is safe, and then you have to make sure that you're getting a good return for the risk which you're taking. So with this definition, let's try to examine what a carry trade even is. So the idea of a carry trade is you borrow money in a currency which is being given at a very low rate of interest. That is, the cost of money is very low. And then you take it into a market where the cost of money is quite high. And then you lend it over there, and then you make the difference, assuming that the currency which you're borrowing doesn't strengthen more than the yield differential between the two places. So, for example, if I'm borrowing in the yen at, let's say, 1%, and the US dollar is giving me 4%, 5%, and over the past 2 years, the US dollar did strengthen in comparison to the yen. So, you would have made the interest rate differential, and secondly, you would have also made an appreciation because the dollar strengthened in comparison to the yen. However, as of late, those who got onto the trend later ended up suffering because those who borrowed the yen much later into the cycle, the low interest rate cycle of the Bank of Japan, they would have expected the dollar not to strengthen much more. And we did see the dollar actually weaken in comparison to the yen, because the Bank of Japan said that, look, the yen can't be so weak. We need to start managing the exchange rate. And they started buying off yen in blocks, huge blocks in the open market. And they also said that we're going to increase interest rates in Japan. And when you increase interest rates, that obviously means that your currency is going to strengthen. So when this happens, we see that those who borrowed in the yen and then went to buy assets in the US suffered from losses, because now the money which they have to pay back is getting, in real terms, becoming a lot more. So you have to pay a lot more dollars to be able to pay back the yen debt. So what do you think about this carry trade, and do you have any examples related to
that? The carry trade is a very famous thing.
Okay.
It depends on when you get into the trade.
Yeah.
Like Soros, if you get very early into the trade and you ride it all the way up.
So in this case, what would be the early, if Soros were to do this, where would he have gotten it?
About 3 years back.
3 years back.
Buffett got in about 18 months back.
No one was talking about the carry trade 3 years back.
Yeah, that's the time to get in.
Okay.
And then you wait And at the peak, if you're a trader, you sell at the peak of the market and then cover when America cuts rates and Japan holds rates. So if he had what a man like Soros would have done at his peak, would have got into the carry trade, gone all the way up and sold just before when people were talking about rate cuts. He would have exited, doubled down and shorted the other side and wait all the way till the interest rate comes down and cover. So you make money all the way up.
So you would have shorted the dollar.
He would have gone long on the dollar. Gone all the way, covered his positions, then shorted the dollar and wait for a year or 18 months and covered his dollar position.
So shorting the dollar meaning he might have bought treasuries in yen.
He might have bought Japanese treasuries. He could have bought Japanese assets. Any Japanese asset he could have bought. And that would have really doubled it in the sense that Japan has now got inflation. And for the first time, wages are going up above inflation. So Japan is not going to cut rates anytime soon. Whereas America will be forced to cut rates 3-4 times next year. So he would have covered his position and gone short today, yesterday or tomorrow, and then waited for it to come down all the way down to some point till he felt that the yen would weaken. And so he would have made a good killing. The reasons for him to would have short are simple reason. Because China is going to become the pariah of the world. That is, the US and the Europeans are not going to buy Chinese products. And politically, it is unpalatable for India to get too close to China. So Russia, China will get boxed together, which means the Japanese cars will do well, except in Middle East. In Europe and America, the Japanese cars will do well. And this means that it is good for Soros to he would have shorted the dollar and covered it in about 12 to 15 months. The first person to do such a trade was Richard Cantillon. In the Mississippi bubble, he went long on the Mississippi stock. At the right time, he exited it and then borrowed stock in the market and sold it and covered it next to nothing and returned back the stock, worthless stock back to the owners. And so Cantillon was supposed to have made £1 million.
Million pounds.
Way back in 300 years ago.
The 1700s.
In the 1700s. So this is how a master would trade. And if you look at Soros's career, they are littered with hundreds of such examples. The point with Soros is
he has made plays on the yen, by the way. He has made plays on the yen.
I do not know how. He is not giving public interviews these days too much.
The Alchemy of Finance, he writes about owning positions.
I'm talking nearly
80s.
In the 80s. We are talking about 35 years ago. I do not know today what he would have done. But what I'm trying to say is, he has done it when he shorted the British pound. The man who shorted the pound. So he would have added, this would have been a similar opportunity like that for him. But however, for people like you and me, it would be like picking up pennies in the front of the train. The more ideal example would be millions of Indians who are trading in options. You are trading in weekly options.
You mean writing them?
Yeah, writing them or buying them, both. In both cases, the market can go out of money and ruin you. At least when you are buying option, your loss is limited to the money you are putting in one option.
You're just losing the contract amount.
You are losing. When you write options, which a lot of retailers are doing today, you have a potential to lose a lot more.
But then how do these guys say that, look, there's a stop loss and it'll stop as soon as, I'm going to set this percentage, that percentage?
If you have seen markets, I have seen Indian markets close down 10% and then open again, close down 10% and shut.
Because I have a friend who does option writing and he says, look, I put
his model does not mean. His model does not forecast that the markets will go down 20% in a day. If the index goes out 20% a day, how much ever you have written, you would have wiped out quite a bit of your capital. The guy who allows you to write the option would have written he would have considered maximum risk and put it. So all your collateral will get wiped out and you will...
So would a mechanism like stop loss not help him over?
No, it won't. There is a particular Nassim Taleb talks of a trader called Victor Nickeldorf or some name, Victor something. I'll get you the name. Where he believes he loses once like this, what I'm talking about. He wiped out. He told Taleb, he bet the lightning won't strike the same place 2 times. The chances are 1 in a million. And he will do the same trade again and get wiped out the second time. There have been bigger people who have been wiped out. The long-term LTCM is one example, where people who are Nobel laureates got wiped out. Right? their entire fortunes got wiped out. So you don't think that only what you have written will get wiped out. You can get wiped out completely. If the market cracks, you won't even have a chance to get out. Okay. The market opens, it's down 10%. So one-sided. Yeah, it's down 10%. You shut down, again it opens, you are worth 10%. Yeah. You are get wiped out completely in 20%.
So you've heard it here. I mean, for those of
this happened in India.
Yeah. So
in 2011. And I've seen the other side also.
And these are all people who had their supposed risk control strategies.
Yeah. And I have seen when Manmohan Singh won in 2009, two upside moves which froze the market. Market opened, went up 10%.
It hit the upper side.
Circuit twice in a row. Okay. So it can do anything.
So you've heard it here. I mean, you have a false sense of safety which you think that, a stop loss can prevent you from taking on huge losses. There are times when a stop loss is not enough. There are times when portfolio insurance is not enough. So you have to understand that writing options is basically you're an insurance undertaker, right? As far as
yes.
Yeah. So unless you are an actuarial scientist and you have a team of actuarial scientists working for you and you're able to. So the difference between life insurance and writing portfolio insurance is it's easier to predict when a man is likely going to die than when a market is going to act up.
Really. And it is like this. Suppose it's like a coin toss.
Yeah.
If you win heads, you get $1. Tails, you lose $1. A guy who has got $10 is likely to get wiped out sooner than later.
Yes.
Because for every toss, he is going to lose one and he is going to gain one. So if 4 tosses go below me, I am 6. Then I have to put 4 tosses in a row to get back where I am.
Yeah. So it takes more amount in the sense that the percentage increase when you're down has to be much larger to even get back where you were than the amount you lost. So for example, if you lost 10%, so suppose you went from $100 in your or 100 rupees in your net worth to 90 rupees, you're going to need much more than a 10% increase. 10% would just mean 9 rupees. So you'll get back to 99, you won't get back to 100. So you'll need a 12% increase to get back to where you were. So that's the idea he's trying to say. And I couldn't agree more. And to all of you who's watching, and if my friend is watching, please reconsider, because even during a benign market, I mean, the market is quite benign right now. Even during a benign market, something like a carry trade can blow up in your face. So don't have this false sense of security that only during a bear market will I be wiped out. You can be wiped out in any particular scenario. It doesn't matter whether it's a bull market or a bear market. Most people would see green in their portfolio right now. But those of you who are engaging in risky strategies like trying to pick up coins in front of a bullet train, we have to send you words of caution and urge you maybe not to speculate on this, because you're taking on quite a lot of risk, and it's better off you write life insurance policies than actual portfolio insurance policies, which is what writing options are.
Those who are buying small cap stocks in India in these frothy valuations are also engaging in this, because you don't know the quality of the promoter, you don't know the quality of the numbers.
Yes.
So everybody is putting money in it. The fear of missing out is driving you in.
Yeah.
There's a good chance you may get wiped out, but not fully, but substantially.
Then my question to you becomes, when you get into something, when you get into an investment, what is the number one question you ask before getting into it? Because for Howard Marks, it's how much can I lose?
Exactly. How much capital can I lose?
Okay.
Suppose if I buy ITC.
Yeah.
Okay, I may lose some capital. Even I bought it at the peak at 500 rupees. I have just lost 80 rupees.
Yeah. So the first question, so you share this point with Howard Marks. So you think that's bad?
Yeah, because I know there is going to be growth in ITC.
Yes.
I know that it is going to be the biggest food company. There's always a chance that the short-term loss of capital, I will recoup.
Yeah.
In a coin toss, it's over, done.
Yeah.
It's kaput, it's over.
So exactly, like he said, we hope you take this advice, and we hope you go out and read about the carry trade and you see why it goes wrong and how it can go awry. And hopefully those of you who are currently doing option writing are aware of the risks that are entailed in the activities that you're doing. And the NSE, as well as a few other organizations, posted out data on how about 95 to 98% of option traders, futures and option traders, are loss making, right?
More than that, 9 out of 10.
So about 90%.
99, they say 99. So okay. I don't know. Anywhere between 95 to 99, you take your pick.
So anywhere between 95 to 99 doesn't matter. I mean, that's a huge amount. So as people who discuss on finance, it's our duty to bring this message out to you. And we hope you click on the link in the article below to read what the carry trade is and learn more about why you shouldn't be picking pennies off of a railway track. That being said, thank you for joining us on BRich. If you liked the video, please hit the like button. If you haven't subscribed already, please hit the subscribe button and hit the bell icon to get notified for when we drop our latest video. And if you have any opinions or comments which you'd like to share with us, please leave it in the comment section below. We do make it a point to read your comments. Thank you again for joining BRich.
Thank you for supporting BRich. I told you about visiting Singapore. The date has been finalized. It's 25th August. It's a Sunday. Those desirous of meeting me in Singapore can drop a message to the WhatsApp number given below or contact my team by an email. My team would reach out to you and we will assure you of our best services. For English and Hindi, there will be a separate PT. See you in Singapore. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to brichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.